And just like that, the party is over. Jeremy at the Night Group, your favorite Austin realtor. Over the last few years, we've seen a crazy seller's market. And unfortunately, for homeowners getting ready to sell right now, well, we're at the end of that. I want to hear from you in the comments before we get started. Are you seeing this in the market? Do you think that the seller party is over? Are you currently buying? Whatever you're doing, I want to hear from you in the comments. We all like to read these comments. I know you like to write them, so drop them below. So, all right, so here we go. So a lot of things are happening in the market right now. Right now, we're patiently waiting for the April numbers to drop for the Austin area. But here's the deal. I'm going to be honest with you. I know they're going to be over the 625 mark that we saw last month in March, but guess what? It doesn't even matter. And what you're going to start hearing from all these realtors is what we hear every single year when it comes around July. The market's shifting, it's over, party's over, it's done. And you're gonna hear a lot of realtors crying. And those same TikTok realtors that have been saying, oh, the market's not gonna crash, are now gonna start heading for the doors and leaving. But homeowners are getting ready to sell. There's some things that we're gonna have to talk about here and that you're gonna have to know about. First off, what we're seeing is inventory is starting to climb. I've said this several times that as we get closer to June, July, that we would start seeing this inventory. Now CNBC and a lot of people are noticing that, yep, more supply is hitting the market. So with all of the supply hitting the market, what that means for sellers is more competition. Now, normally, I mean, in the Austin area right now, we're less than 4,000 units on the market, which means typically, like, this is still a heavy seller's market. Well, with the interest rates creeping up to over 6%, 7% in some cases, that takes about 30% of the buyer pool completely out. So what we're seeing is a lot less of these crazy over list price offers. I personally just put a home under contract for myself this week. I'm gonna do a whole video about that. I'm leaving Austin. Yep, you heard it here first. I'm gonna put a whole video out about why I'm leaving, what's happening. And no, I'm not moving to Dallas and to getting an apartment in Dallas. So if you got that joke or reference, there you go. And before you get worried, no, I'm not leaving very far. I'm staying very close. Drop a comment below. What suburb around Austin do you think I trekked out to? Drop a comment. We want to hear that. But here's the deal. So 30% of those buyers are now out of the market or pushed out of the market. The advantage is that as we see more of these builders put their inventory in the market, which is going to hurt sellers and their prices, we're going to start seeing a major leveling in prices. But all these buyers that have been waiting FHA, VA should be able to start coming back in the market and getting some of these properties. But the competition is going to be under that 600 level in the Austin area. So here's what we're also seeing in the market. And this is what actually worries me about the Austin area in general. It also worries me about the market in general. Tech stocks over the last couple weeks are way down and they keep going down and there's no end in sight as of right now. Now, something I've always said about the Austin area as being protected is the fact that we have so many good paying tech jobs moving here. Well, if the tech bubble starts bursting in the Austin area, that could impact prices even further. So sellers or homeowners that are getting ready to sell, you really need to pay attention to this video. And buyers, this is actually a great time for you to be looking in the market. Yes, you're going to say, real estate agents always telling you to buy, but if you've been waiting for a while and you have a need for a home, you're still going to be there. Now, look, I'm still having clients buying homes like crazy right now because they're seeing the softening and they're jumping in. A lot of cash buyers are jumping in. So you homeowners, keep in mind, you may get a cash offer. It might not have been as good as it was a couple months ago. But the problem I see with these tech companies is this as well. So like Apple's saying that, hey, people are quitting because they don't want to go back and work in the office. Now, this is primarily the Bay Area, but May 23rd, they're saying that they want all their employees back at their physical locations. And people are leaving their jobs. You have a tech freeze happening right now. So they're freezing a lot of these hirings that were supposed to happen. So like Facebook is a great example of that. Meta is freezing their hiring. So if a lot of these tech companies start freezing, especially in the Austin area, you're going to see a lot less buyers in the pool. And again, with that 30% less from interest rates increasing, dropping what they can afford, now you start losing some of these tech buyers. You're going to start seeing potentially that the higher end price homes, like the $1 million price homes, start seeing a lot less competition. And so instead of going $200,000, $300,000 over list price, maybe you get list price. Maybe you get slightly below list price. maybe prices start coming down. And if we look at the 2021 numbers, we see a pretty big fall off, which happens in July through August, September, October. So we might see a pretty big dip in prices considering that prices went up so quickly right now. And here's the other thing that's really hurting the Austin area, and it's going to be hurting a lot of people. And now people are actually paying attention to what I've been saying for more than 2 years, is that those property tax valuations came out and they are very high. Now everybody's doing videos about taxes and how high they are. No duh, I've been screaming this for 2 years. But the Austin area seeing these tax increases is also going to harm what people will afford. And a lot of sellers are starting to go, okay, it's time to sell because I don't want to pay these property taxes. And think about a lot of those investors. I've said this before. A lot of those investors that have had a home for 4 or 5 years might finally say, okay, it's worth it. I don't have to pay short-term gains anymore. I don't want a 1031. I'm going to pull out my money. Especially with the stock market crashing right now. One thing that could be a positive for the housing market, as people pull money out of the stock market, they need to put it somewhere. So do these people start putting their money back into physical assets? Crypto's going crazy. Tomorrow, we're going to talk on my Real Migos. Kevin's coming back, Mullet Man. We're having Mullet Fest, and we're actually going to talk about crypto and all that good stuff tomorrow. So check that out if you want to hear crypto, NFTs, all that good stuff. That's tomorrow. But with these markets being shaky, people want to put their money in physical assets. So I don't see the market doing a full crash like everybody's saying, because people are going to have to put their money somewhere. And if we look at the 2020 pandemic, there was what, $2 trillion in unspent dollars. So people still do have unspent dollars. That's partly why we're seeing with inflation isn't hitting as hard, is because people do have money held over from 2020. Yet that's going to burn through pretty fast the next couple months. And so we might see that with the dreaded recession, which means that potentially 9 out of the last 10 recessions, home prices actually didn't really go down. So people pulling the money out of the stocks could keep prices moderate. But again, with all those really high interest rates, I'm facing it. I'm buying a home right now. I'm paying really high interest rate. Not that I wanted to do, but there's still a lot of buyers out there, just not as many now. But here's the deal. We still have more buyers in the 33 to 40 age group, which is the buying age. So that will also temper slightly how the housing market turns out. So it may not come down or crash as much as people think it will. Here's the other thing, a piece of information that people don't really want to talk about yet, because they want to talk about the word crash and like clickbait and all that fun stuff. The amount of foreclosures and homes that are facing delinquency just went down again from like 5.3% to like 3.3% delinquencies. So that's lower. Now look, 2008, we had a lot of delinquencies. Will we start seeing more delinquencies? Probably, but not as high as we saw in 2008. So while everybody's hoping to buy a home in a year or 2 years when the market crashes, it's not here. So for all you buyers that are jumping back in this pool, know that it's not going to be as crazy pool as you saw last year or in 2020. It's also going to be a little bit expensive because interest rates are high, prices are higher, so it may not be as joyful as you'd like. And homeowners putting your home on the market, I'd set the expectation that you're not going to see 8 offers the day you list it, but it will take maybe a couple weeks to actually get buyers in the door, and maybe you're potentially going to have to start negotiating on price, incentives, and things like that. And oh yeah, all you builders, good luck. Jeremy at the Night Group. We'll catch you in the next video. Make sure to drop a comment below. We'll see ya.